Good morning, all. How are we all doing? Morning, Martin. Morning, Byron. Kennelly, Steve, Tony, Danny. How are we all doing? John, Berlino. Morning. Right. Have a quick look at yesterday and a quick recap of news overnight before we get going. I'm going to trade all of the indices again this morning with the new variation on the opening range breakout EA. So I've set them all up to trade the Frankfurt open again, just because I want to test it. Basically, I want to make sure it runs properly on multiples. Basically, so not expecting huge profit off the London, the New York ones, obviously, but we'll see what happens. Morning, Virginia, Zico, Brian. Morning. Right. So yesterday, not a very good day yesterday. A bit of drawdown control yesterday across all accounts. Basically, the New Zealand dollar continued its little squeeze and the US dollar continued a little bit of a rally. So minus 0.57 on the ADR reversals, 10.8 on the month, though, and 3% of drawdown. There's nothing really in problems on the ADR reversals at the moment, apart from US dollar yen, which is just stuck. So been stuck for a while, that one. H1 M5 mean reversion, 1.29% drawdown yesterday, 0.5% done today. That was all overnight swap, though. Nothing you can do about it, basically. Half of that shouldn't have triggered, but yeah. Brokers. So yeah, 0.5% done today. 2.59 drawdown, nothing in drawdown, basically. I think some of this will probably get banked today. The New Zealand dollar, we'll have a look at it all in a minute, but the New Zealand dollar seems to be pulling back now. So I'm expecting at least a pullback, if not a V-shaped recovery on those New Zealand dollar moves. So that should all, hopefully, fingers crossed, half of that appear over there today. H4, M5, 4.28% drawdown, 1.7 drawdown control done yesterday. So that puts it negative for the week. At the moment, the H4 set file still 13% on the month, but not banked anything so far this week. But again, there's a lot of profit sitting there at the moment, so we only need kind of half an ADR to an ADR pullback on half of these, and that'll bank 3 or 4%. So main problem on H4 is still US dollar yen. 6 position on now, but that's in profit. So if we get that push on the US dollar or the yen today, or that pull on the US dollar or the push on the yen today, then obviously that's all going to go into profit. So hopefully we get a move on that. We'll have a look at news in a minute. And hedging, 12% drawdown, 1.26 DD done, 25% on the month. Just on one DD control today and one bank. CAD yen banked. Oh no, sorry. We're doing all the way down there. Pound Swiss banked, Aussie US drawdown done. So yeah, just everything's sitting around at the minute. Morning outro. Right, so news overnight. Negotiations likely to agree on a slimmed down accord with just a few key numbers. This is to do with the US debt thing. It looks like they're coming to some kind of agreement on it, but what it's going to be, I'm not quite sure. Bank of England's Haskell yesterday, further rate hikes can't be ruled out. We've been saying for the last 2 days that we're having 0.75 to 1%, so that's pretty much pointless, isn't it? We know, you've said. I don't think there's a deal on the US debt ceiling will be reached today, but the list of outstanding issues is growing shorter, so they are coming to some agreement on that. Might be bullish US if that happens, so we'll see. No agreement on the debt ceiling. There we go. Right, so CPI from Japan, 3.2 on a forecast of 3.4. So inflation's gone down, which is a little bit bearish yen. But it's all going in the right direction, which means they may not need to increase their interest rates. So we'll see what happens. But if that yen continues to weaken, they will do something with it. So Australian retail sales came out overnight as a 0, so a slight drop in retail. We've had the UK retail come out as positive. We've got a 0.8 on a 0.4 forecast. So that's the overnight news. Today we've got PCE at 1:30 ahead of the New York Open. So that's the only news we've got today to look forward to, which is US based. Apart from that, we're pretty flat for the news. So, and obviously we got a bank holiday on Monday. So we might find we get quite a volatile day today because they may well want to push positions ahead of Monday. So if you look at the calendar, we typically tend to get an end of month rally or end of month dump as they readjust and get the profit targets hit. So Monday's a bank holiday. So we might find we get a lot of unwinding of positions today because they're not going to be around on Monday. And Tuesday and Wednesday is the end of the month. So we'll get a rally into that. And obviously we've got FOMC. No, sorry, man, that's on the week after, isn't it? So we got end of month potential movement Monday, Tuesday. So we might get a big day today. There's a lot of unraveling due, obviously. So. Right, that's those. Morning, Great Filibuster. 11:55 p.m. where I'm at. Evening, afternoon, morning, Dureska. Right, let's watch the open. We got 3 minutes to the open. So a lot of this stuff is starting to unwind. You can see some of this this drawdown control that was done, like Aussie Swiss, for example. Here, look, this was done on the overnight swap. That was where the market closed, and obviously they spread all the way down to there on the overnight swap. So they put in a 11 pip, so incoming mail, quarter of an ADR basically on the swap, which obviously did a bit of drawdown control. There's another one as well, wasn't there? Euro odd as well. So again, this one, look. See that, can't you? So drawdown control done there. Price was down there. That was the spread. So broker spread basically spread me out to 28 pips. Again, quarter of an ADR spread. Nothing you can do about it, but drawdown control gets activated when it hits a level, and the spread said the level was there. So we did some DD control. It would have triggered anyway, to be fair. So that's why we got that little bit of a loss this morning, because it's just overnight swaps. Right. Let's watch the open. Can't you get the EA to ignore the spread overnight? I wish, Kenley. That's like saying, can you ignore the tax man and not pay him? No. Cost of doing business. Can't do anything about it. You could do. I mean, you could build into the EA and say, don't do drawdown control between certain hours. Yeah, I mean, you could do. But overcomplicating something that's just back to life. Normally you'll find if you get spread out, you will get hit there anyway. So, right, market's open. So your pre-market break is short on the DAX, target hit already. Short on NASDAQ and short on the S&P, short on the Dow. S&P for some reason hasn't triggered. Okay, so DAX, that was really quick. Done on the DAX. So DAX made $823. Job done. Nice and quick this morning, wasn't it? Trailing stop triggered, obviously, on that one. So that's it. DAX is done. Why is that not triggered? P. Quick look at the logs. P, S&P, US 500. Buy stop. Operation details. Yeah, buy stop. So where is it then? Oh my God. What the hell is that? Okay, that's a bug. Is that taking yesterday's high and low? Look at that. So it's for some reason it's thinking the opening range high and low is yesterday's high and low. Okay, I found a bug. What the hell? So why didn't it do it on the others? That's bizarre, isn't it? Okay. Cancel those off. I suppose a break of yesterday's high low is probably not a bad idea, but anyway, that's not the plan, is it? Have I done what have I done there? I don't know what that was. Anyway, right. There you go. So DAX was nice quick one today. Nice quick profit. So the Dow stopped out on the short and has flipped long. Still short on the NASDAQ. Weird. Oh, the fun of development. Morning, Julia. Tiny ORB today. I'm out, break even short. Unlucky outro. I'm out. Profit. Break even short is better than being a loss. So we've had one stop out, haven't we, on the US indices? Oh no, we haven't. We've had multiple stop outs on the US. Dow stopped out on the sells. We know that. What else has stopped out? Stopped out on its buys as well. Oh, right. So it's triggered buys and then stopped out on those as well. So it's a whipsaw on the Dow. Obviously, we won't. I mean, normally you would not trade these in the morning. These are the afternoon, aren't they? So I'm just testing logic basically here. So I'm not expecting these to be profitable. Although they were yesterday. We made $9 grand out of these yesterday, didn't we? Hit and miss. We'll see if we can get a net profit out of it, though. We should be able to get a net profit. If the NASDAQ comes down along with the Dow and the DAX, we should be able to get a profit out of these two. Will pay for the losses. And if we can get a runner on one of those, it'll be a nice profitable morning. DAX is still going short. So if you're trading the 5-minute opening range, you've got 30 seconds left on this candle, but that's your 5-minute opening range break today. So that's quite a nice tight opening range for a good move today. Let's have a quick look at where we're potentially going on the DAX. So tricky. Bit of a sideways rotation day yesterday. So we got this propulsion gap target to the upside, which is 125 ADR, which is the previous highs there. So if we are going to pull back on this move before putting in a new leg short, that is where I'd expect to get to. That is also going to reform that range high. So upside target today, I would say we're looking 125 max. Downside, obviously you've got last week's low. So basically we tested that yesterday and rejected it. So yesterday's low would be where I'd expect to get down to. And then 125 to the downside would be that previous week's low down there. So basically, from where we are right now, upside target potential is 125 ADR, and so is downside. So we'll see where we go from here. Opening range break on the 5-minute has gone short. You're already triggered short on that one. That's place 2, isn't it? So this is all working. That's good. At least everything is logically working, apart from that S&P, which you need to investigate. 2, 3, 4. Good, that's cancelled. That's good. Yeah, it's all working. Very good. Okay, it's TP here on the NASDAQ. The NASDAQ and the DAX basically today, TP and a TP. Very good. See if we can get the runner on that. If we get the runner on that, that'd be lovely. Obviously, we need this one to come down as well. We'll see what happens. but the DAX is what we're focusing on. So, morning, Lucas. Currently on the Bootcamp. Cool. Make sure you finish it. Did you smash the like? I did. Thanks, Jareska. Everybody else, hit that button. How many we got? 77 people. Let's get some money. Let's get some money? No, let's get some thumbs. Money just comes. Thumbs is what we want. DJ. Okay, we'll have a look at the FX in a sec. Morning, Michael. We'll just wait for this. Just want to see what happens with these two. Just want to keep an eye on it because I'm live forward testing the EA, so I just need to make sure the logic is working. And obviously, that's the whole point of this forward test, is to find bugs like that. So, no idea why that used yesterday's range and the others didn't. That's really bizarre. Today's high and low. Weird. Anyway. So that's running a 200 pip trailer. So that will start to trail down. So if we get a little bit more movement down to there, we'll get breaking even on that one. Notice the slippage on this as well. So this is the only problem with this version of the breakout strategy. So the normal opening range breakout strategy that trades the 5-minute ORB or the 15-minute pre-market as well, it doesn't really have too much of a problem with slippage because your orders get placed before the price movement actually gets to the breakout levels. The problem with the 5-minute pre-market, and this is one of the reasons I wanted to forward test all of this, is slippage. And I think that's going to be a big problem, and you're always going to have that problem. So the faster and the more volatile the open is, the faster your execution with your broker needs to be. So you need a fast machine with a fast broker to take advantage of this. If you've got any kind of lag, like if you're trading on an 8-cap broker, for example, you're not even going to get triggered there. You're going to get triggered with your initial entry somewhere down there. And obviously you've missed the move. It's pretty much hit target before you actually get entered. So slippage is going to be a real issue with this. So we need to take that into account. So new back testing needs to make sure you've got, I'm going to do slippage tests on it as well to make sure that it stands up in slippage. That looks like it's on its way now as well. So if we get a TP there and we get that runner in place, that's going to be 3,250. With 578 in the hole, so be about two and a half grand day morning even. Quite like trading these US indices at the open. A big profit yesterday. Not doing bad today either, is it? So I might look at testing those over the night. I've never tested the US indices in the morning with the opening range breakout EA. Never occurred to me to try and trade the US indices in Frankfurt, and it's never occurred to me to trade the DAX during the New York Open either. So I might try some cross-testing on those and see if we can maybe find another little edge. Right, let's look at the FX pairs while we're waiting for that to finish off moving. So ADRs today, so far we've got nothing. Obviously, news this afternoon is US is 130 for the PMI figures. Sorry, not PMI, PCE rather, this afternoon. So there's no news until PCE. So far, the Asian session has been fairly quiet. The main movement we've had is a start, and whether this continues today or not, we'll have to wait and see, but a start of an unravel on all the Australian and the New Zealand moves. So if you look at the New Zealand dollar pairs, we've had reversal alerts on the hourly on all of them, pretty much. So we are starting that move, potentially that pullback. So if we can get a decent negative move on the US dollar today, I think there's a good chance, and that seems to have started already. There's a good chance that it will give the New Zealand time to breathe, and we might get some movement on these pullbacks. So everything's starting to kick in. So all these setups that we've had on the H1 and the H4 timeframes, they're all starting to mean revert now. So we just need that follow through. Would be lovely if we got sort of 100, 150 ADR moves on them. I don't think that's on the cards, but at least if we can get sort of half an ADR to an ADR out of these today, a lot of this will turn into green and get banked today. So we'll see what happens. But so far, no ADRs. The weeklies we've looked at multiple times this week because they hit early on with the New Zealand moves. So all of these weeklies, some of them are still valid, like Aussie New Zealand. So, we are still valid for a short. It is Friday, though, so last day of the week. So you need to get in on these today, really. Aussie New Zealand started to run down. Aussie US, again, started to tick up. So that's going to give you a reverse alert on the 4 hour. We've got another 2 hours on this one. But if that candle closes bullish, you've got the reversal alert there as well. So we're starting the pullbacks. Market structure shifting back to the upside. So a lot of those are starting to play out. Your monthlies, obviously, Aussie New Zealand. We've got Euro CAD and Euro New Zealand. So we've looked at Aussie New Zealand. So Euro CAD and Euro New Zealand. Obviously, this is the move. And we're looking for that pullback. So monthly levels are hit there. And on the Euro New Zealand, as you'd expect, monthly levels are hit there as well. So loads and loads of opportunities on those, but we're in them. You should be in them already. We've had a little bit more of a squeeze on these New Zealands than we were expecting. So RSIs, there is nothing to look at on the hourlies at the moment. All the hourlies have started to unravel. So we are starting to roll over where we had the hourly RSI extensions, like this one here. So we're coming out of RSI extensions now. Need to get some follow through on these, basically. So propulsion gap targets to the downside. We've got support targets as well. All support targets and all propulsion targets to the downside are all bankable. So we just need a little bit of movement. So we'll go through the RSIs on the 4 hour and have a look at those. Let's just have a quick look at what's going on. Okay, so we've reversed back up. Right, so that's interesting. So that stopped out and that hasn't flipped long. Why has that not flipped long? Correcting stops because of slippage again. See, there's a lot of slippage in this. What was that? 801. 814. Attempted to take another trade, is it? That should have flipped long there. It hasn't for some reason. Needs more work. Right. I won't go through that now. Likes are automatic over here. Good man. Off to work. Outro, good man. Well, not good man. Don't want to go to work, do you? Morning, Kelvin. Morning, Steve. Or by outro, even as you just said. Morning, it's time. Morning, Brian. Euro pound. Yeah, we'll have a look at that. Right, so let's flip over. Euro pound isn't on the cards. GU isn't on the cards either. So we'll have a look at those two quickly. Euro pound. So Euro pound is just range bound at the moment. It's not going anywhere. Nothing to do with that. It's sideways. Why would you want to trade that? It's just stuck in the middle of a range. So not interested in any way, shape or form. And US dollar, potentially, if we get some US dollar weakness, a drop, we've got at least another 1% coming on the pound. So the pound should be bullish. US dollar could at any moment default and collapse. So I'd be looking for nothing but longs on this. It's not set up at the moment. So there's no trades on it at the minute. But if you want to trade it, it is a long at the moment. However, I've no idea how the market's going to react to this debt ceiling thing. It could well, depending on obviously what the outcome is, it could well totally collapse the US dollar, or the US dollar could absolutely fly. I've no idea. We've never had this situation before with the US ever. So we have no way of gauging what reaction the US dollar is going to do when we get whatever result we get. So at the moment, the US dollar is just totally unpredictable. However, the pound we are expecting to rally. We've got another 0.75 to 1% coming over the next 6 months. So it's long-term bullish. No idea on that. So technically you got a 4-hour entry on that. I think the 4-hour is already in that. On VPS, where are you? Wake up. GU. No, didn't quite get an entry on it. So the 4-hour RSI extension would have come after the reversal alert. So yeah, it wasn't an entry on it, unfortunately. But that, you've got kind of an entry there if you want it. I'd watch this level here. If I was going to go get into this, I'd be more comfortable getting in at that monthly support level here. Yeah. Which is also ADR, but it could just go from there. No idea. It's just impossible to tell with the US dollar at the moment. It's just impossible. It could go either way, so just be careful. Aussie CAD 4-hour retest. Position trading getting you all excited. Not that exciting. It's like watching paint dry most of the time. So yeah, Aussie CAD, nice little push up there. Got no positions on that at all. No entries on the hourly. 4-hour, we've got entries on it. Aussie CAD long, 2 positions on. It's just coming back into profit. GJ, sideways, mess. I don't. No idea. Not going anywhere, is it? No trades. Flat. Got some talking heads now in the next half an hour. So, yeah, ECB. So we might get a bit of a rally on the Euro and the DAX, but we'll see what they say. Wait and see if there's any news comes out on here. But look at the currency strength all over the place. Everything's literally all over the place at the minute. There's no dominant currency anywhere. Euro CAD. Let's have a look at that. Euro CAD. Again, Euro CAD nowhere. We're sideways 1, 2, 3, 4, 5, 6, 7 days sideways. So we've just broken out to the upside. So it's a range break. I'll be looking for longs back up into propulsion up here. Euro is a long. Canadian dollar is going to move with the US dollar. Let's have a quick look at oil, what oil's been doing. Oil's coming down, so the CAD's coming down. So oil failed that breakout, look. So that breakout that we were hoping, well, I was hoping was going to be start of a rally, total failure. Straight back into the middle of that range. So again, you're stuck, totally stuck on oil. Just can't get anywhere at all. Again, it's a good buy spot. Look, I mean, market structure is bullish. You've got a low, a high, a higher low, a higher high, higher low, higher high, higher low, higher high. Buy it. So if that's going to rally from here, and we're going to put in a new higher high, that's going to rally the Canadian dollar. So Euro CAD will probably just do a little bit more of that because the Canadian dollar will be strong. Euro potentially is strong. So a strong against a strong is a sideways. No, just don't take it. There's no point in looking at it. This is what the dashboard is for. Yeah, if it's not lit up on here, there's no point in looking at it because it's sideways. If it's sideways, we're not interested. We're interested in things as mean reversion traders. We're interested in things that are extended and are likely to snap back. If it's just sitting sideways and there's no strength in either direction, you can literally flip a coin. In fact, you might as well do that. If you want to trade Euro CAD, flip a coin, pick a direction, get in, because you've got as much chance as anything of winning that way, haven't you? So, the situation with the debt limit has happened before in 2011 when RS took the House and Obama was president. And again, yeah, but they've never defaulted on it, have they? Which is what I'm saying. They've never actually defaulted on their debts. They may have come close or something, but this is the first time it seems like they are actually going to. But whether or not, I don't know. Who knows? So what happened when they were getting close, 2011 and 2013? Be interesting to know what the market did, what the outcome was, and what the market did. Because obviously, if we look at history, it tells us where we're likely to go, doesn't it? They threatened default on both occasions. All right, okay. Yeah, so it'd be interesting to see what the results were. Obviously, they didn't default. So if that is going to be the case this time, what happened to the US dollar those last two occasions? If the US dollar rallied when they didn't default, we should expect the same thing to happen again. However, we obviously don't know if they are or not, do we? This is the difficulty. You never know what the actual outcome is going to be. All a political circus, yeah. Brian, I don't see us defaulting, but maybe. I know it's all ifs and buts. That everything in trading is ifs and buts. Always is. You know, it's one of those things where everything will have an impact in a direction. And as we've seen, yeah, New Zealand dollar and the euro are prime examples this week or this month. The New Zealand dollar interest rates increased on a forecast increase, which is bullish. Yeah, it collapsed. So when you look at history, and it's the same with all indicators. Everything is telling you what happened in the past on that occasion. Why has that got any relevance on what's going to happen on that occasion with that result in the future? You have FOMCs where the numbers all come out absolutely brilliant and the US dollar tanks. You have FOMCs where the numbers come out absolutely brilliant and the US dollar pumps. It doesn't matter what the news is. The news moves the market. But typically, what will happen is the banks will move the market in the direction they need to make the money. So what happens with news and what happens with the debt thing in the last two occasions isn't necessarily what's going to happen this time. We're in a completely different economic position, and that's why you get different results. So the last two times it happened in July 2011 and January 2013 were interest rates at 5.25% and possibly at peak. Probably not. So therefore, we're not going to have the same situation now because that's not what's driving the market now. What's driving the market now is interest rates. So you can never actually tell, but it's always good to have a look and see what the outcome was. Let's see if I've got enough data to go back there. It was July 2011. July. There. We need to kind of know when it was really, don't we? But that's July 2011. Didn't do anything. There was no, I mean, it obviously moved up and down, but there was no like catastrophic, oh my God, that everything collapsed basically. And January 2013. So that's the 1st of January 2013 there. We had a big rally. You know, this is the thing. Was that rally because of that situation or wasn't it? Don't know. What does the US default mean? It means they, as far as I'm aware, I mean, I don't know. I haven't looked into it hugely. But basically, they haven't got enough money in the bank to pay their debts. All countries have interest payments to make on all sorts of things. Same as you. You know, we take a bank loan out. We have a mortgage. We have to pay interest on it all. So does central governments. They haven't got enough money to pay their interest rates. Their interest. So they're going to default on it. It's basically like, you know, you're going to get a black mark on your credit rating. So next time you go for a mortgage, you get a worse rate. I don't have a set playbook of what happens to a currency when that happens. We don't really know because it hasn't really happened. It's almost happened, but never happened. So there you go. Forginis just said, downgrading credit rating, therefore more expensive for the US government to borrow money. Yeah, so it's exactly what I just said. It's the same as everything else. If you miss 3 mortgage payments, the next time you come around to remortgage, they're going to go, well, you're not very good. We'll give you one, but you're going to have to pay a bit more for it. It's the same thing. So what that causes a problem is if you haven't got enough money to pay your mortgage and you miss 3 payments, you're behind on your mortgage and you still haven't got enough money really to pay your mortgage. And then they put your mortgage rate up because you haven't got enough money to pay your mortgage. So it's a never-ending spiral of, oh my God, I'm going to have to lose my house and go into rented property because I can't afford a mortgage. I don't quite know what impact that's going to have on the US economy, but whether it has an impact on the US dollar isn't necessarily related, because economic growth isn't necessarily always related to financial currency exchange rates, because there's 2 parties involved. So you might get a movement, but that doesn't mean that we're not going to continue to spend all of our money in the US dollar as we always have. So at the end of the day, it doesn't really matter too much. If it's a black swanable event, we need to be worried about it. If it's not a black swanable event, it will come back. It will go down 200, 300 ADR, maybe for a few days, and then it'll bounce. If you're position trading, it doesn't really matter, does it? But we don't know, is the honest answer. We never know. We'll see. John, they can't pay for pensions, healthcare, unemployment benefits, etc., etc. Basically, their skin. Exactly. What happens when rates go up and the biggest debtor in the country is your own government? Yeah, similar will happen here. It's likely what happens in the US tends to snowball, and that's what happens around the rest of the world. Which is why we pay so much attention to what's going on in the US, because the problems they have are the problems we have. We live in an international society, and when things go wrong in the US, it tends to knock on to us a little bit later. So, World Debt Clock, interesting. Yeah, somebody posted a link to the World Debt Clock. I think it was in here. Or there was a Fed debt clock or something, wasn't there? Yeah, this website is quite interesting. Like, public debt to GDP ratio, 79%, 299%. So this is why the yen's having a bit of a problem at the moment. It's interesting. Don't really fully understand it. What's the UK? That's what I'm interested in. 108. Not doing too bad. Better than others. Not as good as the rest. See, our national debt, look, right? We owe 3.7 trillion? Quadrillion? I don't know. 3.7 of them. We're making 3.4 of them. So it's the old adage of, oh, love, there's more going out than we got coming in. Oh, dear. So what you have to do then is borrow more money because you haven't got enough coming in. So you have to borrow more. And as you borrow more, it means your debt goes up. But this doesn't change. So all you end up doing is spiraling into more and more and more debt. And the US normally just print a load more money to solve the problem, which causes more debt. Anyway, whatever will happen, will happen. Debt spiral. Most of the money you have spent on serving the interest. Yeah, exactly. You're stuffed, basically. Everybody's stuffed. Morning, Neo. Will Rishi Sunak be doing some drawdown control? That's what they need to do, innit? The US needs to do some drawdown control. No, they basically need to, whoever they owe the most money to, they just need to nuke them. Then they won't owe that money anymore. Problem solved. That's what Russia's doing. Anyway, let's not talk about that. What will be, will be. Just have a quick look at what the indices are up to. Still short on that one. Why did that not go long again? I'm glad it didn't, because it's absolute whipsaw. This is why you don't trade the US at the Frankfurt Open. Yeah. DAX, everything else sideways. That's what normally happens. Yesterday was a bit of an anomaly, I think, wasn't it? Because we had the big stock earnings come out. So, right. ADRs, RSIs. Aussie dollar CAD, 4 hours we're looking at because the hourlies are flat. So there's still opportunities on these, although they are all starting to play out. So we've been looking at these for the last 3 days. They're all mostly New Zealand dollar related. So we're looking for the pullback on this move, back up into there. So longs, obviously, Aussie dollar CAD on the 4 hour extension. Drop down. You've missed the entry this morning, but That is starting to play out. Aussie dollar Swiss, same thing, starting to play out. Although that looks like it's rejecting again. So we've tried to rally and getting hammered back down again. So we might have another leg down. Really nice support coming up at ADR today. We've got the 3-week low coming up down here at ADR. So this would be a really good spot if it does get down to there today for a, well, depending on how many entries you've got. But this is on the hourly. There's 2 entries already, so that'd be a third. And then wait for that to push back up again. Obviously, this is just parabolic. So it's not even really a flag. It's almost a flag. But yeah, if it gets down to there, we should get a nice bounce out of that. Swiss franc, obviously, potentially rallying with the euro. Aussie dollar, US dollar, starting to push again. So would be lovely to have some negative news today. If we get decent negative numbers off of PCE today, we should see a lot of these moves all starting to unravel. So the US has had some decent money. There's been more money flooding into the US, and it hasn't helped any of the other currencies get any traction. So if we get that US weakness, we'll get some traction across the rest of the currencies, and all these will start to unravel. We're just waiting, really. So Aussie US massively extended. It's one of the biggest extensions we've had for a while. So we made it down to 12.5. We just don't get down to that level. It's just this is a huge move. So we had that US dollar strength coming through at the same time as we had the New Zealand dollar weakness, which dragged the Aussie down, and obviously that's gone super far. So big pullback expected on that one. You can see the obvious support levels in there. So it's all drawn in by the indicator, that monthly low, that monthly low. So if you're looking for a continuation on this market structure to the downside, that's where we're more than likely going to find sellers start to step in to re-add their position short. So pull back up into that support and drop. That will be the exit, obviously, on the longs. Euro odd also extended to the upside. That is starting to roll over again. Again, if we get some Australian, New Zealand dollar strength coming through. Euro, we've got no news coming up at all. Really, the next week's quiet, really quiet. So next week's news for the euro is we got CPI for Germany on Wednesday. That's it. So we've got CPI for Germany on Wednesday. So there's no news to really rally the euro. So unless Lagarde comes out and starts talking up interest rates again, this should be able to just get a pullback. But we'll see. So it should be bullish euro overall. So this is a mean reversion against the trend, obviously. Big uptrend at the moment. Euro New Zealand. Again, same thing. So Euro New Zealand, obviously the New Zealand dollar is the main mover this week because of the interest rates. So watching this high here, which is the previous week's high for potential bounce point, but I don't think they will bounce there. When it comes down, they're going to come down deeper than that. So they'll want to do, I would imagine, at least a 50% retracement on that move into this propulsion area here, if we are going to rally. And again, it's all down to that New Zealand euro as to whether we get any strength on that this week. And I don't think that we will because there's no news. So we really just need some strength on the New Zealand to bring this one down. But stuck at the moment and still moving. So this is just flagging at the minute. As you can see, we're not actually pulling back. So it could potentially rally up into here. This has got the potential to turn into a squeeze, this New Zealand dollar. It's very difficult to tell why we got such a negative reaction to a positive interest rate. So it's filled with these propulsion gaps. And as you can see, this is the accumulation break where they started selling, and it has caused a pause, but not the retracement yet. So we just need to wait and see what happens with that one. Pound odd. That's just starting to roll over up there. Again, pound bullish. Lovely bounce off the 24. So just looking for a pullback into this area somewhere, into that propulsion gap, which is all these highs here, or this one here, which is this high here for a bounce. Failing that, we're going to rally up into last month's high and then come down from there, I would expect. That's only just extended now, and it's going to come out of extension as soon as this candle closes. Pound New Zealand, same story. Pound odd, pound New Zealand, same thing. We are just starting to roll over on this. Again, looks like it could potentially be flagging for a leg up, but we are right at the monthly, and that's not really a great resistance, but that is a weekly high from that accumulation. So that's where we've tapped into, as you can see. So we tapped straight into the monthly high, limit orders triggered. Again, really good example of why support and resistance works. The reason support and resistance works is because these levels are being watched by the banks and institutions as they are previous areas of interest and previous bounce points. So limit orders get placed there. So as soon as you hit them, those limit orders trigger and they overwhelm the buyers who have rallied hard to get there, run out of steam, and then the limits just take over and the sell starts. As the sell starts, the buyers that were in there see their P&Ls come down, they take profit and add to the selling pressure, which is why we get bounces at support and resistance. So again, triggered perfectly on the pound New Zealand. New Zealand dollar CAD, that's bounced off of monthly as well. Again, we overshot a little bit there, starting to rally up. But again, we need that New Zealand. We need this oil. We really want oil to come down now. DAX is puking, is it? It has puked. Oh, look at this. Going to hit TP on that one. Where was TP on the DAX? Where's my TP gone? Oh, that's easy to hit, isn't it? Again, trailing stop took out on the DAX, look. So this was a 5R. Wait, this was a 5R. So why have I only got 4R on there? So that was the 1.5R. That was the initial TP. Pulled back, stopped out. Boom. So the opening range break on the pre-market gave you, I don't even... some more in, shall we? Let's go big. So 6. Let's go 7. Let's skip straight to 10. Don't need to go more than 10R, do we? There you go, 10R, short. I've done a load of testing on this yesterday. So I reran tests on the opening range, pre-market 5 opening range. So previous tests I'd done with and without trailers, all profitable across the board. 28 runs, 28 profitable. 242 runs there, 242 profitable. How was that? Is that an electrical? Did you hear that? Sound like a crack. Hopefully that wasn't electrical. If I start to smell burning and I disappear, hoping that was my blind. 176 runs yesterday. So this test I did yesterday was using the 150 to 200, so 1.5 to 2R target on position 1, or up to 3R target on position 1, and then position 2 targeting a big runner of 5R to 10R. So exactly what we've just got today, 10R return plus on the break. And that one, we've got some big numbers. Look, 100K. So this has been tested over a period of a year. So this is March 21 to March 22. So 100K return. You know, the top sort of top 30 odd results, all somewhere between 70 to 110K return. Drawdowns maximum 15, minimum 9, and that's targeting 6 to 10R with a trailer as well. So that is using a trailer on the second position. So that's all turned out massively profitable as well. Again, 176 runs there. How many profitable? 176 profitable. Minimum return 40K. So I can't break it. This 5-minute pre-market, I've run 6 tests now. Every single system parameter permutation comes out profitable. So there is going to be stagnation in it, though, as usual. But this, days like this, you're going to absolutely kill it. That's just about to hit TP on that NASDAQ short as well, even though we don't trade the NASDAQ at this time. That should have also flipped long there and then reflipped short, taken a 1.5 and a 5. So we should have had 2.5K extra profit on that. That's about to do 2.5K. So that's 5K on top of whatever it's returned, which is minus 15. So it's a 3.5K morning again. We did 9.5K yesterday. And the S&P didn't even trigger. That would have done net. Difficult to tell that, actually. That probably would have been about a break even. So all profitable. And if only I hadn't used a trailing stop on that. Honey, I'm thinking about getting a proper valuation to test live this afternoon, but that didn't trigger this morning properly. So until that works, I'm not going to. Where did we get up to? Sorry, I'm waffling and drifting off today, aren't I? New Zealand dollar CAD. Thanks for the follow, whoever that was. Telegram trader. You need to join the Telegram group. Where did we get to? Did we get to the New Zealands? Yeah. So New Zealand CAD we're on, aren't we? Let me just catch up on the chat. Geez, US 30 going to be crazy day? Is it? Why that? Why is the US 30 going to be crazy? Speaking of currency conversion, buying euros with US dollar would be a loss. I don't know. Buying euros with US dollar would be a loss. Only if euro US dollar goes down, surely. I don't know. New Zealand dollar forecasters had priced in 0.5% rise and only got 0.25%. So same basically. I didn't see any news about New Zealand dollar forecasts at all. So that would make sense. Exactly what they did with the euro. They factored in too much with the euro, which is why the euro tanked. So that makes sense why that's dropped. So it'll all come back. It's basically a correction on the overprice, basically, which is not unusual, unfortunately, because the market are stupid and get it wrong. Rajiv, I must have missed what you use for backtesting. What I use for backtesting, strategy tester. Just the normal backtester in MT4. Nothing clever. Are we in danger of unraveling the week's damage? Hopefully. Fingers crossed. Steve, if you try the new opening range Breakout EA on a prop account, how will you limit the drawdown? What do you mean? So the EA, there you go, TP hit there. So if it had fired properly on that, we'd be it's in. So there's drawdown control built into this in the same way as the other one. So when it hits a maximum loss, which you would set at whatever. So if it's a 100K account, you'd set it at 4.5K. If it hits that, it closes everything and stops trading. So that's how you would limit the drawdown. Other than that, there's no other way. Limiting drawdown. Drawdown's drawdown, isn't it? So, Dreska, I meant that up move. I was expecting more up move from there, but it dropped. Yeah. So yeah, we'll see. It's difficult. The speed of this move, you would expect a pullback off of it, but you do get these huge propulsion gaps go in, and the market literally just runs. But as somebody's just said, if this is an overpriced correction, it will come back in the same way as the euro is an overpriced correction. Yeah. So they factored in 0.25% more than they got. They got it wrong. So they have to correct and escape some of that exposure, which is loss, basically. This is loss taking. They factored in a rate increase for where the currency was put. that rate increase didn't come to fruition. So therefore, they're 0.25% down on their forecast. So they have to correct that position. This is why you get these runs. I didn't see any forecasts on the New Zealand dollar. I did know they were over forecast in the euro, though. So there's nothing you can do about it. Have to wait. You never know how long it's going to take. It's basically waiting for the banks to sort of get their books flat, and then it'll all start to move back. And that's what I say. If we get some weakness on the US dollar today, that will give them a chance to scale out of some US dollar currency and drive it back up. And it all starts to correct itself. It's all a fine balancing act. When you look at things like this currency strength meter, these are all balanced. You will always find, you'll never see a currency strength meter where you will find everything like this. It just doesn't happen. There's always something that is being driven. So you'll always find a currency. There's a dominant currency. So in the banks, they call it working the currency, basically working the dollar, working the euro. So when you look at your charts, you can see, oh, they're working the euro today, because the euro will be pumping. Everything else will be flat. And then you'll get your currency strength meter showing strong euro. And then you know that there's been reversion opportunities on the euro. So what you're waiting for is another currency to start to get work. So if they start working the yen and driving the yen transactions, the euro will mean revert. So, you know, this is why people go, oh, currency strength's the best thing since sliced bread. But what it actually shows you on a currency strength meter is what's happened in the past. That's no use whatsoever. So it doesn't really help you. All these currency strength indicators people buy, the theory's good. Reality's not actually. There's no real executable edge on them. So just tells you what the market's, what's hot and what's not. If it's hot, you've missed it. Yeah, it's like saying, oh, look, the DAX has collapsed. Quick, sell the DAX. You've missed it. It's collapsed. Now it's going to come back up again. So if you start selling it down there, you're just getting on the boat too late, aren't you? Anyway. Steve, sorry for the stupid question, but it is in the ORB test results, wasn't the DD quite high? Would it still be profitable if it were closing out 4.5% DD? This is closing out 4.5% DD. So these results have got a 4.5K max stop. Yeah. Somewhere, one of these settings. One of these settings. Close all, there you go. 4.5K. So it automatically, so what this is doing is if it gets up to 4.5K, it'll stop trading. Yeah. So all these tests I'm doing are for prop, for prop use, basically. If you don't want to use this for prop, take that off, you'll get totally different results. So yeah, I mean, there's a lot of settings in the EA, so there's all sorts of different results. I'm fine tuning this to see what is the best, the optimal settings historically for prop. I'm going to blow accounts with it. This is going to blow accounts. There is no strategy, no EA out there. I had not so much an argument with somebody yesterday, but a conversation with somebody in the MQL5 chat yesterday about the market reverse alerts EA. And he left a review saying, oh, it's taken 15 trades and 15 losses. He's using a stop loss. Like, well, yeah, you've had a bad run. Like, what were you expecting? Well, I was expecting to make a load of money. Good for you. That'd be lovely, wouldn't it? Not real world, mate. Sorry. But that drawdown of 9.71% there means this, if you put this on a prop account, it would have run for an entire year, never blown the account. It would still be trading it 12 months later. This one would have blown the account because you've got a maximum drawdown of 10%. However, intraday, this could have blown the account. This one here with a 9.71 max drawdown for the entire year, that could have hit a 5% max drawdown loads of times, couldn't it? If you hadn't have had that in place, that maximum. So you're going to get stagnation periods where it's not going to make money and it's going to blow accounts. But the days where it banks 7 grand, you're going to withdraw that 7 grand. Yeah. So this 109K is what you would get basically if it was running 24/7. in real terms, I mean, it's up to you how you run your prop. In real terms, I do not run my prop accounts 24/7. If I get an account traded up to a limit where I want to draw money out of it, I will stop trading it. So I protect that capital and I draw that capital and then I restart it. So there'll be periods of days where it's not trading because I want to protect the profit it's made. If it's had a really good run, or I've had a really good run scalping and I've made $3,000, I stop and I'll work another account, because that account, if I run the risk of having a stupid bad run, over leveraging and blowing that $3,000, that $3,000 is real money I can take back out. So I'll move on to another account. So that 109 isn't necessarily what you're going to realize. You might realize more than that, because the days that you have this turned off could be the 3 days that it makes a loss and actually makes 130 grand. But you won't know that because you don't know which days you're going to run it. So all this backtest is what are the optimal settings for producing a decent amount of profit with a decent amount of drawdown. You can pick any of these. They're never going to produce the same results. You're not going to get these results. You're going to get something totally different, because the next year's trading is not going to be the same as the last year's trading. However, it tells us it's stupid, right? So these trailing stops are all 300, 200. Yeah. All of these are 150 or 200. So what it's telling me, this backtest, is that if I use a 200 or 300 trailing stop and a 150 to 200 initial TP, percent of opening range, those are good settings to produce fairly small drawdown with a decent amount of profit. What it's also telling me is, if I wanted to use a 500 or 400 pip trailer and went for a 250 to 300 initial TP, I wouldn't make as much money and I'd have whacking great drawdown. So the purpose of this test is to say, right, what's the bad and good, roughly, TPs and trailers to use? So I know from this test, it's telling me that I don't want to target too high on my initial entry, and I don't want to use a big trailing stop. I want to use a tight trailing stop, and I want a tight TP. The difference is between 30 to 60K return and 70 to 110K return. So the purpose of system permutation tests like this are literally to show me what is optimal and what isn't. I'm never going to achieve these results. I know that. But I know that I shouldn't be using wide stop losses and I shouldn't be using big targets. It's a scalping strategy is what this result tells me. That's basically why I do all of these tests and run so many different tests. Is it good to use a trailer or not? It is okay to use a trailer. Okay, so if it's okay to use a trailer, what size of trailer? Let's do some more tests on trailers. Okay, well, definitely it needs to be a small trailer rather than a big trailer. If I use 150 or 300, I've no idea. Every day is going to be different. Some days 150 would have been better. Some days 300 would have been better. Today, we got stopped out here because I used a 200 trailer. If I'd used a 300 trailer, we'd have made a 10R return. We didn't, because I used a 200 trailer. There's no point in saying, oh, well, I should have used a 150 or 300 or whatever. Some days, it's just going to go down to 5R in one candle, and the trailer is totally irrelevant. Other days, it is relevant. There's no right or wrong. You can't have an optimal, there is no such thing as an optimal setting for an EA that works the best, because the market conditions here are never going to be repeated. But it shows you roughly what you want to do, doesn't it? That's why I run these system parameter permutation tests. As long as all of them are profitable, which they are, I haven't run one test which is not profitable. I know the strategy has an edge. It's just a case of finding out what's roughly the best edge to use. That's all these tests are doing. So anyways, why was I waffling about this? Somebody must have asked a question. Oh yeah, sorry for the stupid question. It wasn't a stupid question, Steve. It was a good question. But yeah, I've no idea. And this is why I say a prop. People play prop, in my opinion, the wrong way. They're trying to scale an account. They want to get an account. They want to hold it for 6 months and scale it up to 1 million. It's never going to happen, because your strategy is just not going to be able to stay within the constraints of prop. So the best thing to do is to try and milk prop for as much as you can. Go in high risk, high reward, and stop trading. Yeah, a little bit like Tom Hugard does. Those of you that know Tom Hugard, yeah, he trades $200 or £200 a tick on indices. Yeah, he only needs one trade a day, and he's made 20 grand. Yeah. If you do that with prop, you only need one trade a month. You've made 20 grand. That's it. Stop. I'm done. Mortgage is paid for the next 6 months. And this is the idea behind this. All I want is something that is not going to be too dangerous, but I can leverage quick to make a quick 10 to 15 grand a month. And then stop trading. Like yesterday, we made 9. Today, admittedly, if the EA had a run on all trades, it would have made 3.5. 12.5 grand in 2 days. Out of 4 instruments, trading 2 sessions. Stop. That's me done for the month. That's what I'm looking for. Yeah. So and that's what these tests are to determine, is what are the optimal settings to have that happen. If you can do that 5 times a year, 5 days a year, you're making 50 grand. If you can't survive off of 50 grand, obviously you've got costs of prop in there. You're going to be spending 5, 10, 15 grand on prop valuations. But even so, you're still going out net 35, aren't you? Or more. We don't know what it's going to be because, as we know, the market determines what we earn. We don't. The system doesn't. The market does. You get into a trade which has got a 99% strike rate. The day you get in, it's going to fail because the market decided that day it didn't want to do what your system did. You can't control it. The market is uncontrollable. You just get on and get off. So as long as you're getting on with something you know has got a long-term edge, that's where you're going to make the money. And we need the data to back it up. So that's what that is. Anyway, we were talking about RSIs, weren't we? Just jumped to 78 points on the DAX, usually 5 points. What that means, Tony. At this rate, you're going to get both kidneys. So I need the money for the machine. Don't worry. It won't be expensive. I've got to get it working first. At the moment, we've got some bugs to iron out. But it's lovely, isn't it? When you've got something that doesn't work. Something that doesn't work and generates a positive return. Imagine what happens when it works. Works in a strategy tester. There's obviously something with live execution that's not working. And I'm not quite sure what it is. I've got a feeling it's something to do with slippage. And I have got 4 pip slippage factor built in, and that doesn't log. So I've got a feeling I know what the problem is and how to fix this where it's not triggering, where it should have triggered more trades here. And it did it on the US tech yesterday, and I think it's slippage. So I'm going to do that and retest it this afternoon. I love the idea of blowing accounts and just buying more. That's exactly how you do it. Well, that's how I do it anyway. You know, it's a cost of doing business. Literally, $500 to me is a trading account. I buy trading accounts for $500. And it's like, look at it like scratch cards. Yeah. You go and buy 10 scratch cards, you're going to get a couple of winners. You always will. The odds just mean you're going to get a couple of winners. You go and buy 10 evaluations, you're going to pass a couple. The couple that you pass, all you've got to do with them is make back the money in a couple of trades that you lost by buying the scratch cards. It's maths. 10 evaluations is 5,000. 2 of them get funded. That's what I need to make. I made 9K yesterday in 1 session within 15 minutes. Right? What's the profit? 4K. 80% of that. That's my pay. It's a business. It's maths. It's exactly the same. Cost and profits. Your stock is an evaluation. Your profit is the evaluation passes that turn into funded that actually have trades that become profitable. If you pass 2 and you fail both because they blow without making that 5K back, you're -5. You have to buy 5 more. So your outgoings this month on your business are 10K. Hopefully, we're going to get a couple of those through. You've got to be really bad to do 20 evaluations and not pass one and actually get some withdrawal money from it. You've got to be, the system's got to be totally broken. But, you know, pass on demo for so many people I'm going to buy a proper valuation. Have you passed on demo yet? Have you taken 100K demo with your broker, right? And put your strategy on it and traded it up to 108K. If not, do that first because it's free. Basically, you're paying for a demo account with a prop firm. Why not do it with your broker free first and prove that your strategy can actually do it and then move it over to prop and pay 500? That's the first step of passing prop. Can you do it on a demo account? If you can't do it on a demo account, what's the point in buying a prop account? All you're doing is you're paying for a demo. Again, people don't think about it in that way. That's exactly what you're doing if you think about it. And the 3.5K today is only from the morning sesh. Yeah, so this afternoon, obviously, and I don't forget, this is not this is not optimal. These indices, these three, I mean, that didn't even fire, but these we do not trade in the Frankfurt session because the liquidity is light. This is the money maker in Frankfurt. This is the money maker in New York. This one doesn't move in New York. So we're actually trading completely unoptimal. And as I say, this is just testing at the moment. I want to make sure that logic's working, and that is exact. This one here is the exact perfect trade. Look, so this is the perfect scenario. 5-minute opening range, breaks to the downside, 2 entries, 1.5 TP hit, 5R TP hit. Job done. Out. 3,250 profit. If that happens in the DAX in the morning and the NASDAQ in the afternoon, yeah, you've just made 7K. Stop. This is the problem. This is what people don't do. If you do that, right, this is risking 2%. So there was a 1% risk there. And let's say there's a 1% risk there. You've risked 2% today. Yeah. 3% less than your allocation to make 7 grand on a perfect day. All you need is 2 perfect days a month to make 14K with this strategy, right? If you can spend less than 14K on prop evaluations, I mean, it's not that hard, is it? But everybody, for some reason, over leverages and tries to blow it. They don't stop this. This is what they don't do. They don't stop. That's why Brian was saying he's about to get paid from Fiedelcrest. I don't know if Brian's in here this morning. I think he is. I said to him yesterday, right, brilliant. If you've got profit, stop. Get paid. Get the evaluation you've passed, the money you've spent so far back, and then turn it back on again and hope you get a massive run. If you don't get a massive run, you'll blow it and you have to start again. If you do get a massive run, stop, draw it out, pay yourself. People don't pay themselves with prop for some reason. It's one of those things, isn't it? Anywho, enough about prop. Spreads are jumping all over the place. Oh, sorry, what was that on, Steve? On the DAX? Do we have some news? Might have had some news if the spreads were big. Question about one of yesterday's topics. What are your thoughts on putting 1/3 of your capital into your broker and then trade all pairs with 0.25% risk? I wouldn't trade all pairs with 0.25% risk. You're going to get yourself into some big drawdown. If you're going to trade all pairs, you need to be using 1/3 of that 0.1% risk. I would go with if you're going to trade all pairs, because you're going to find on a multi-pair squeeze, like New Zealand. This is the account that is trading all of them with 0.25% risk. Yeah. So the VPSs that I have set up, the VPS that I've set up with the 4 strategies on, is trading every single trade possible to take with the normal risk parameters. The idea being is that we can see every trade taken and what would have happened to each of them. If you do this and the New Zealand dollar now collapses 3 ADR, right, this account will blow. Yeah. I'm not hiding anything. This is not how you trade. This is not how I teach. You expose yourself twice. If you're going to expose yourself 7 times on the New Zealand dollar and you do it with 0.25, you're going to be in massive pain. You need to reduce that. And if you're going to do that, you're probably going to need to put all of your money in the account. You shouldn't, if you're risking properly, you should never really get above 15 to 20% drawdown. That's kind of the maximum really I've experienced and started to close stuff. And it always happens, always. As soon as you start to close out with a loss, everything comes back your way. but you have a pain point where you just can't go on. And that's what mine typically is. Very rare it gets there. It needs to be a big squeeze to get you there. But if you go in with that sort of risk, 0.25% risk per trade, on and you only put a third of your money in, you're going to struggle. But start, I mean, you can always start with a third of your money in there, but bear in mind you're going to get probably to a margin call. What you don't want to do is don't want to get to a margin call. If you get to a margin call, they will close your positions. If they close your positions, it's all loss. Yeah, so you've got to keep an eye on it very closely. When I get anywhere near, I mean, I don't even get anywhere near a margin call. If my balance drops by 50%, I top it up straight away. Because if you get close to margin call, they'll shut the positions, and that instantly it's gone. Can't get it back. But just be careful. The best thing to do, the best advice I can give you is to test, right? So put the set file on 10 pairs, 10 different pairs. Run it for a period of 6 months. Yeah. And then get those results out into a spreadsheet like this. Actually, I haven't got one. Let me just run a test. No idea what this is. No idea what these settings are, so I have no idea what these results are going to be. I'll just pick something at random. But basically, when you've got when you've run a test over a period of 6 months or whatever, pull those results out in a spreadsheet. Every single trade. So go to the results. Yeah. All this in here. Yeah. Copy all. Paste it into a spreadsheet. Repeat on the next instrument. Copy it. Paste it in the spreadsheet. Repeat. Copy, paste, copy, paste. Do it 10 times with 10 different pairs, right? And then sort it by date closed. Yeah. In there. So in the results, you'll have a column where the positions were opened or closed, whichever. I can't remember which it is. Actually, it's open. It's this one, actually, yeah. Sort it by that. And what you're going to do is you're going to put all the trades in order, and you'll see what the maximum drawdown on the account was closed. You won't see the open drawdown, though. Yeah. So that will give you an idea of what your losses were along the way and how much money you needed in your account to stop a margin call. And then double that. And that's what you need to have in your account. That's what I initially did when I started position trading. I said, right, I'm going to pick 8 pairs maximum to trade. I ran the tests on those 8 pairs, saw what the drawdown was without aggressive drawdown control as well. Yeah, don't forget, you can't factor with anything that you're going to do to intervene into any of your results. So put all of that in there and see what the worst case scenario is, and then double it. Because that's the worst case scenario last year or last 6 months. We've no idea whether there's a war going to kick off in Europe. We've no idea whether the US is going to default and drag the world down with it. We've no idea if there's another pandemic coming. We've no idea what's going to happen in the next year. Your results are going to be completely different, but you need a worst case scenario to work with to start with. You've got to have some kind of account balance based on that. So look at that. Picked it at random on the DAX. No idea what it is, and it's made 81 grand. I like this EA. I love it. So yeah, so basically pull the results out and just do that experiment and see what happens. All you can do. What's your lot size in when trading the ORB? Lot size is calculated automatically based on risk. So with the opening range breakout, yeah, look at that. I made 200 grand. What was that? 106 grand with 11% drawdown. $300 pip trailer. 150, 500. Yeah, I mean that's the optimal set file. That's the one I've got running. Nice. So yeah, so there's your results. So you copy all of those, paste them basically. So the ORB basically, it will auto-calculate your lot sizing. So in the opening range breakout EA, there's all sorts of ways of risk, but I use an amount of money to risk per trade, of $500. And that is based on a percentage of the opening range. So my stop loss is, so for example, this pre-market 15 opening range would have placed the pending orders there and the stop loss there. Yeah. So my lot size is whatever $500 risk is at that point. And the lot size will be different each day on each instrument. So if you look at this one that traded today, we took 79 lots on the NASDAQ. We took 32 on the Dow. We took 79 on the NASDAQ there. We put 11 on the S&P 500, 105 lots on the DAX. So, but every single one of these trades, look, $500 loss, $500 loss, $500 loss, $500 loss. It's $500. That's all that's ever at risk, 0.5%. So this is a 100K account. So it's risking 0.5% per trade. 2 trades per entry, 1% risk per trade. Return is $325, which is 3.25%. So I'm risking 1% to make 3.25%. Best case scenario. Do that twice, your mortgage is paid. Job done. Obviously not going to do it twice. I'm going to do it as many times as I can. So if you come to bigger drawdown, do you act then manually or let the bot do the drawdown control? Up to you. So basically, have you done the bootcamp? If you haven't done the bootcamp, watch the bootcamp, which teaches you aggressive drawdown control. There's also videos on the website about aggressive drawdown control. So if you go into the free trading and education videos section, there is a video here on how to survive a squeeze. That will help you with aggressive drawdown control. I thought I had another video on it. But in the bootcamp, basically, day 4 of the bootcamp is all about risk. Yeah. So how to position trade, trading risks, and managing your drawdown. And this covers aggressive drawdown control. Yeah. So all I do when I'm trading is I monitor my dashboard. Yeah. And I watch this. So this is my focus throughout the day. And anything that gets above my pain threshold, which is normally 2.5% to 3%, I then start doing aggressive drawdown control. But the EA automatically does drawdown control along the way. Yeah, so it scales out of 1/3 of positions as we go. So here, for example, there's one on the screen right here, look, New Zealand dollar Swiss. So we took a long there, we took a long there. Yeah, this trade here is drawdown control. So this position here, this 0.94 was a 1 point something, and the EA has scaled out of 1/3 of that position because it's moved an ADR against us. Yeah, and that's what the loss there is. Yeah, so it will automatically scale out of positions as we go, which brings our average closer to price, giving us that exit on ADR when we get a push. But if something squeezes really hard, like the US dollar yen is on the 4-hour mean reversion here, we've got 6 positions on at the moment because it's a bit of a squeeze. It's in 1.62% of drawdown. If that starts to get into the realms of 2.5%, I will start aggressive drawdown control. And aggressive drawdown control basically is waiting for a level that looks good for a bounce and taking a position which is 50% of the initial size. So we're currently trading 2.65 lots short on the US dollar yen. So if that gets up to 2.5%, I'll wait for a good bounce point on the US dollar yen. So if we look at the US dollar yen, where we are at the moment, I mean, it's coming down. So, but let's say it pushes up. There isn't really one on the US dollar yen, actually. There isn't one. So all we would do with this one is, let's say it pushes up further today, yeah, and we get up to 150 ADR, for example, and we see a reversal alert trigger on M5, I will take an aggressive position of, what was it, 2.65, so 1.35, for example, lots short there, and a stop loss above that high, which is aggressive drawdown control. So aggressive drawdown control is just a standard trade with a stop loss. So what we're looking for is we're getting in with much bigger lot size than we've got currently on our trades, which brings our average price up dramatically to give us a chance to reach it very, very quickly and get us out of that trade. And then you use that profit to scale out of some of the trades that you're in. Yeah. So let's say, for example, on this US dollar yen, there is videos on the YouTube channel about aggressive drawdown control as well. But so we're sitting in $2,000 of drawdown. So let's say we're sitting in 3K of drawdown. What I would do is when I get into roughly 1,500 to 2K profit on that aggressive position, I will then shut that 2K out, put it in the P&L, and use something like 1,000 to 1,500 of it to start closing this out. So I close out half of that, 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 and use this money from this trade to reduce the pain on it and get that drawdown back down under control. So aggressive drawdown control isn't a money-making trade. It is a drawdown control, aggressive drawdown control. We're controlling the bits that are going wrong. So position trading is all about focusing your attention on what isn't working. When you're getting into trades that are in green, I'm not interested in that. I'm not interested in that. I'm not interested in anything here at all. Nothing here is of any interest to me whatsoever. It's just in 0.5% of drawdown, 0.3% of drawdown, 0.6% of drawdown, right? This market is going to go like this all the time. And these are going to become green and they're just going to get banked. And this is just going to keep banking money constantly. I'm not interested in that. That's going to happen. That's what we want. What I'm interested in is something that isn't working. Why is it not working? Well, it's just in a squeeze at the moment. It looks like it's going to pull back down. If it doesn't pull back down and it gets to a level where I'm not happy with it, I'll deal with it. But that's my job, risk management. I haven't got any management needed doing at the moment. I'm in 4% of drawdown on 22 trades. It's nothing. It's normal. So that's your focus. So the EA manages it for you partially, but you will always get situations where it can't manage it and you step in. And this is what I was talking to this guy in Telegram, not in Telegram, in the MQL5 chat system about, because he's bought the EA and it started making losses. And I was like, well, have you watched the bootcamp? Nope. Okay, well, go and watch the bootcamp. Have you read the manual? Nope. What's the EA doing? What strategy are you using? No, just using yours. It's not working. It's like, you can't trade something. You can't trade if you don't know what something's doing. You've got to understand the strategy. You've got to understand the mechanics behind what's going on. You've got to understand your job. If you set an EA running on your account on 28 pairs and expect it just to make money so you can sit on the beach and drink Mai Tais, ain't going to happen. Because no EA in the world is bulletproof. Every EA is based on backtest results. Backtest results are never going to happen again. So you have to watch your P&L. You have to watch what's going on and you have to deal with what's going on. And that's your job. And that's what the position trading bootcamp teaches, is how to manage the theory behind the position trading mentality, dollar cost averaging systems, which is what all the banks and institutions, pensions, hedge funds, they all do it. But it teaches you what to look for and how to manage the risk, because your risk is managed in a totally different way. And that's what people can't get their head around most of the time to start with. It is very, very difficult to go from using a stop loss and being constantly stopped out and having pain and death by 1,000 cuts to having a trade and just letting it run riot, which is basically what you're doing. It's a completely unnatural feeling to start with. And you will see it until you do it and you see it. You see this 4%. I might come on this afternoon. This 4% is sitting over there as 2.5 and this is sitting as plus 1.1. I have no idea. But I just focus on this and deal with this. Just what's going to happen is going to happen. Yeah, everything's inevitable. You've got no control over whether this goes up or down. This US dollar yen right now is either going to do that or it's going to do that. I have no clue. Neither do you, neither does the banks. No one's got a clue. The PCE figures this afternoon, no one knows what they're going to be. No idea if this is going to rally or drop. No idea if it's going to do a 300 ADR or it's going to drop by half an ADR. What I will do is just manage whatever happens. That's your job, just to manage your account, manage your portfolio, manage your positions. The aggressive drawdown control is all part of that, which is all covered in the bootcamp. We haven't done the analysis, have we? I'm waffling today, aren't I? We got to there, didn't we? But New Zealand dollars, I'll quickly cover the rest of them. New Zealand dollar Swiss, long. New Zealand dollar US dollar, long. US dollar CAD, short. Coming down nicely. See, this prime example. There's my entry. Didn't get a second entry. Really annoying because the reversal alert triggered too close to my initial trade. 39. The reversal alert would have been probably somewhere around about that black line. There you go. That was too close to that, probably by about 5 pips. So it didn't get a second entry. If it had, the break-even line here would be sitting here, and this would be sitting in profit. Yeah. If I'd have been watching, I would have seen that and gone, it's really close. So what I needed this to be was 59. It was 48. 10 pips out. It needed to be 10 pips higher for me to take a second entry because it's got to be 3/4 of an ADR away from the initial position. That's how I'm trading it. I probably would have taken that because it's a weekly resistance bounce. This is what we're seeing here. Coming off that weekly resistance. Good level. And again, aggressive drawdown control. If I was going to take an aggressive drawdown control, let's say I had a position there, and there, and I'm in 5 positions short and I need to do something about it, this is where I would execute it. You can't see because my big head's in the way. Yeah, this is 3 weeks ago, high, double top. That's exactly what we're doing. The sellers are limit order triggering their orders here, and we're putting back down into propulsion. As it happens, if we come back and fill these propulsion gaps, it doesn't matter anyway, because I'll be out with profit. But I would have taken a manual if I'd have been watching it. And again, this is what I was trying to explain to this guy yesterday. Why does the EA not do it all for me? Because you're the trader. The EA is a blunt instrument that executes positions for you based on the rules that you set it to do. If you set it to do stupid rules, it will do stupid things. I would have taken a manual here. I didn't spot it. But you know, this is the problem. You're never going to see every opportunity, are you? So there you go. Hopefully that answered the question. So in a squeeze, putting the 2/3 of the capital in the account would probably be enough to survive the squeeze without a margin call. Probably, yeah. Brian, there you are. I'm here. The only caveat with FIDO is, according to the terms of service, at least one trader must be open each day, and abnormally small trades are prohibited after reaching the profit target. Oh my God, really? Beetle Crest aren't good, are they? Not for the way I do it. So, yeah, annoying. You don't really want a normally large trade. You want a normally small trade. Just something that's a little bit smaller than normal, maybe. Half the risk. There you go. Maybe half the risk. That would be the way to do it. But you can't trade EAs on Feudal Crest anyway, so. Morning. Can you comment on US dollar yen? 140 is broken and ADR around. There we go. I just covered US dollar yen, didn't I, a minute ago? Short. Extended. 4 hour. Short on that. This is all in prop on a large VPS, single VPS. So all of these, this is one VPS, yeah. So I've got 4 accounts running in one VPS here. I've got 3 VPSs basically. This is one of them. I have a live VPS, I have a demo VPS, and I have this VPS, but actually I do mix up the accounts on them. That was what I was planning to do with them, but actually there's all sorts on all of them. Not that organized. So I'm sure you've mentioned this many times. Happy to view the video on your website. Yeah. I'll be looking into what prop accounts to use. Use it with, I'm pretty sure you said E8 and FeederCrest. So if you want to, depending on, go to the trader funding page on the website if you want to know about prop. So I'll put a link in the chat. These are the prop firms that I recommend. Just because there are hundreds of prop firms out there. Virtually all of them have very similar rules, but these guys are all very well established, have been around a long time, have big capital, and I have proof that everybody's been paid. Apart from FeederCrest, and Brian hopefully is going to be the first, but I don't know anyone that's been paid by FeederCrest yet. But they've been around over 5 years. I'd be very surprised if they haven't paid out. We'd know about it by now, wouldn't we? So the problem with FeederCrest is it's no EAs. So the whole purpose of this page on the website is so that you can come and filter these by what you want as a trader. So if you're happy to manual trade, you don't care if EAs are allowed or not. If you want to use an EA to trade, you need one that allows EAs. If you want one that doesn't use stop losses because you want to use some kind of position trading strategy, you need to go to one that doesn't require stops. And as you can see, it just filters it down. So you can then filter it down to the companies that meet your requirements. I want, I don't know, what else might I want? Someone that does instant funding. I can use my Forex funds or the Fivers. Yeah. Payout periods, yeah, whatever you want. But it's got all the prices of them as well. So you can compare the prices. And this, to me, is the most important part, because if somebody's charging me $450 for an evaluation and someone else is charging me $550 for an evaluation, that saves me $1,000 on 10 evaluations. Why would I possibly use the guy at $550 when there's someone offering it at $450? At the end of the day, I'm buying an opportunity to make money. So the cost to me is one of the most important things. As long as they pay out regularly, as long as they don't have ridiculous rules like Brian may have just uncovered, I don't care who I use. None of it's real money. None of them are funding me, really. They're all just paying me with the money they make from other evaluations. So I don't care. What I want is a big company that's established, that has a business model, which means they make enough money to pay the people that make the money. And that's basically what it is. And these guys are all big, which is why they're on that list. All the others that are starting up are either 8-cap white labels or small firms, which, unless they've got massive money behind them for marketing, are never going to make it, and they're all going to go pop at some point. So just use the big boys. Exactly the same as I recommend with brokers. Use a big broker, because big brokers have been around a long time. They're unlikely to go pop and unlikely to have problems. Their systems and everything's in place to work. So it's the same with the prop firm. Everything's automated with these guys. You press a button, and then literally minutes later, you've got your account logins. You're in, you're trading. Yeah. Some of the prop firms that I've tested that look good on paper, I have to wait 24 hours for my logins. Waiting 24 hours for my logins. I want 5 accounts now. Do you want my $2.5 grand or not? Simple as that. So it's just use these, in my opinion. And E8 and my Forex funds are my go-tos. FeederCrest are great because they have 2-for-1 offers, and you can't beat a 2-for-1. So they are more expensive, FeederCrest. Yeah, their evaluations are more expensive. However, if you get 2-for-1, they're still way cheaper. But you can't use EAs. You've got to manually trade it. And one of the strategies I trade is a support resistance strategy, which doesn't require anything more than 10-to-1 leverage. So I use them for that. But it's not a very good strategy. Sometimes it works amazingly well. Sometimes it doesn't. So I don't care. I don't mind spending money to get 2-for-1s. But other than that, I wouldn't use them. And as Brian's just shown, they have some stupid rules, of which I shall demonstrate. Today's the day, Brian. I forgot. Today's the day. let's find the economic calendar. Okay, so as far as Fidelcrest is concerned, you're not allowed to trade through certain news events. And today is a big one. Yeah. Today, where's it gone? The 26th. This afternoon at 3:30, we have the non-defense capital goods orders excluding aircraft. This has the potential to move the market 5 to 10 ADR, an unprecedented event. And it's so important. There is not one calendar on Forex anywhere on the planet that's ever heard of this news event. But according to Fidelcrest, you cannot trade through this. It's imperative you are flat on the US dollar, because the US dollar non-defense capital goods orders excluding aircraft could potentially wipe out your account. So some of the prop firms have rules which you just look at and go, what? This is one of them. So 3:30 this afternoon. I'm really excited about this one. I'm hoping we get a massive spike and it's going to prove me wrong. But Financial Juice have never heard of it. Forex Factory have never heard of it. Investing.com have never heard of it. So where they get this from, and I think Brian's emailed them, haven't you, and said, I don't know if you've emailed them, but can you please clarify what the hell that is? Have they got it wrong? Is it something else at 3:30 this afternoon that we should be worried about? Because as far as Forex Factory is concerned, there's nothing happening at 3:30. Do you reckon it's core durable goods? Do you reckon that's what it is? I reckon it's core durables. That doesn't have anything to do with aircraft, does it? I don't know. But anyway, it'll be fun. We'll watch it. We'll see what happens. It's going to be a biggie, I reckon. I'm looking to understand how the 4 EAs on the single VPS would perform for me. Experiencing myself helps me understand your pains. Yeah. Right. Damn Virgin Broadband. God knows why the recent updates causing havoc. Do you know what? I had the same problem, Rajiv. I had the engineer out last week. Basically, the issues that Virgin had a month or so ago, and this comes from the engineer's mouth, right? First of all, if you're on Virgin, have you got a version 4 or a version 5 router? The version 4 router was the one that looked like a popcorn box and didn't fit anywhere in anybody's TV units. The version 5 is a flat box with a grey front, right? Apparently, that outage they had weeks ago blew a load of V4 boxes. He said the V4 boxes were crap. We only rolled them out for 3 months, and then we realized how crap they were, and we stopped and we rolled out a version 5 router. I was unfortunate enough to get one of the V4s. The V4s basically broke. So if you get the engineer out and say you've got intermittent problems with your broadband, it keeps going down, but it's only the wired connection, because it's basically the wired connection which keeps breaking, apparently, in the router, they'll just replace the router. Since then, no problems at all. So it's a known issue, but they're not letting anybody know. And I had an engineer who was fed up with them and said, oh, that's just terrible. Anyway, there you go. I saw that TopStep offer a package where if you break the daily drawdown, they stop you trading that day, but don't close the account. Who's that? TopStep? But TopStep is only futures. Isn't it? On TopStep futures now. Yeah. So if you want to trade futures, that's fine, but you can't trade futures on MT4. It's TopStep are only futures, and that's quite right. Yeah, a lot of the futures prop firms do that. They will not kill you, because our Trader Pro has got the facility just to close your positions out for you. So it's futures, totally different Totally different kettle of fish. Morning, Keith. Just thought I would let you know FX Chief from MTI passed. No idea who that is. Never heard of him. Dan Fiedelcrest, what happens when you trade during them times? Because I'm sure that I have. Only on funded accounts, Dureska. On valuations, you can trade through the news. It's not a problem. It's only funded accounts. You can't trade through the news. Watch the calendar. Be very careful. Oh yeah, as Brian was saying, you emailed them, and their response was pretty much, "Oh well, use the calendar." I don't even know how we're going to get that news, because that news doesn't exist. I'm expecting at 3:30 something to pop up on here, which is going to tell me what the core durable. Well, it's not core durable goods, is it? The aircraft thing is. Anyway, I use FX Pro Calendar, and it also has the same news release, same time as durable goods. Yeah, I reckon it's core durable goods. It's because it's 3:30, isn't it? No, it's not. Yeah, no, it would be 3:30. That's 3:30 UK time, isn't it? On Fiedelcrest. Unless their calendar's out by 2 hours, and it's one of those. Not PCE, is it? Hang on a minute. Are they talking about PCE? No, it's excluding aircraft. Totally different. It's not PCE at all. Totally different thing. Anyway, forget it. We'll wait and see what happens at 3:30. On the subject of VPSs, I've tested a decent spec Hetster cloud VPS with 4 MT4 terminals, and it was dreadful. Oh, right. Okay. Support not great either. So save yourself some time and give it a miss. Yeah. If you want decent VPSs, go to the website. There's a link on the website to the one that I use, which is VPS Forex Trader. This one, I've been with these guys for years, never had any issues with them. There's loads of different servers. I've got a dedicated server with them, and I've got 2 VPSs. So I've got 2 of these, and I've got one of these. This one, the dedicated, is the one that I run my live accounts on, because I want my live accounts 100% bulletproof. I can run 25 MT4s on it. No, doesn't even bat an eyelid. Brian's just sent me something in Telegram. Explanation of detailed trading is that minimum trading days. To meet this objective, you must reach at least minimum amount of trading business days during the challenge and verification periods. Blah, 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 blah. Yeah, that's during the challenge and verification periods, though. Oh, trading period. Yeah. That's the normal rules. Yeah, we know about that one. It is prohibited to open abnormally small trades just to meet the minimum trading days requirement after reaching the profit target. That's fine. Yeah, that's quite a normal rule. I understand that rule. A lot of them have that rule. Fiedelcrest changed the rules. Yeah, well, they always. I love Fiedelcrest for their cheap 2-for-1s, but other than that, I need EAs. I manually trade very well, but I trade way better if there's an EA doing it for me, because I don't get involved. US Trading Academy, MTI. That's the guy that died, is it? I don't know. I've never heard of them. It's like their Discord. You only get in once funded. Yeah. I have it marked as 8:30 a.m. your time. Yeah, I don't know. Don't know when that news is, but we'll find out. You'll have to tell me, Brian, this afternoon, if you're on the live, what time that is actually in UK, because it says 3:30 on my calendar, so I'm assuming it's adjusting it for UK time, and yours is 8:30 your time. So 3:30, there is no news today. University of Michigan is the last news event today. So I can't find a calendar with anything on it at 3:30 today. This lot. Michigan consumer sentiment, so it'll be after that. Oil rig accounts. Do we lose them? I don't know. Anyway, right. I'm going to leave it there because I've got some work to do on the EA. Baggy, morning. Sorry I'm late. Had to spend time with the wife. Okay, enough said. Not going to go into that one. Henry, pound odd. We'll have a look at pound odd before I go. So pound odd is still extended on the 4 hour. We got the propulsion gap fill done. To the upside, we got highs coming up for 3 week ago high and last month. It's either going to rally and bounce from there, or we're going to get that pullback. So all the Australian dollars, all the New Zealand dollars, we are at the moment stalled on all of them. There's no progress either way. So we will wait. The market's waiting for something. I suspect it's waiting for the PCE this afternoon at the moment. So we literally are not making any progress in any direction on anything at the minute. We're sideways across the board. There's no ADRs, nothing. So all of these are just a wait, unfortunately. Right. I will leave it there. Anything you need, I'll be in the Telegram group. Back tomorrow. No, sorry, I'm back on Tuesday at 7:50 because Monday is a bank holiday. So just be aware, obviously, bank holiday, Monday, there's no trading. Some of the banks will be open. Some of the indices may be open. But most everything is shut. So be careful Monday if you are trading anything. We could have lots and lots of light liquidity. But I'll be back on Tuesday, 7:50. We got the unemployment rates for the yen as well Tuesday morning before we come back. I'll be back this afternoon at 2:20 for the New York session. We'll trade the US indices and then basically see where we go from there. All right. So anything you need, let me know in Telegram. Otherwise, I'll be back this afternoon, 2:20. If not, I will see you on Tuesday. Have a good day.